One of the biggest clouds hanging over the economy right now is that a rising number of homeowners quite simply can't pay their mortgages. Foreclosures have hit a record high. Many more borrowers are a month or more behind on their payments, and we saw the effects on Wall Street earlier this week of that. Financial expert Ray Martin is here to tell us why it's such a problem and what we can do about it. Hi, Ray.
Hey, good morning, Hannah.
So what's the dynamic at play here? Because this accounted for, what, almost half of new mortgages last year? Were these high-risk mortgages?
Yeah, these what are called subprime loans, which are loans that were given to people who are trying to buy a house, trying to reach out and say, I got to buy a house before prices get out of control here. They weren't ready to buy. So they had what people are saying checkered credit history, credit scores under 680, 30, 60, 90 days late on some of their loans, had a demonstrated history that they weren't repaying the loans they had on time. Then a lender said, I'll lend you money to buy a house. You know, these subprime loans were adjustable rate mortgages and the like, and they accounted for almost half of all new mortgages last year. And the Fed did a study that said of the increase in home ownership over the last decade, about half is attributable to subprime loans. The problem is a lot of people in these loans now are finding they can't afford to make the payments and they're becoming late.
Something like over 2 million Americans missed at least one payment at the end of last year?
Missed at least one payment last year.
Wow.
But the percentage of all loans that are in default is about 4.6%, but the percentage of subprime adjustable rate mortgages in default is almost 4 times higher, 14.4%. So that's where the problem is.
Wow. So what are lenders doing? How are they reacting to this?
Well, what a lot of lenders are doing now is just saying, you know, we're not going to make these loans to people with lower credit scores. So they're raising the minimum credit score. They're requiring people to put at least 20% down on a home. They're no longer offering these no documentation loans, which were called liar loans, where you didn't even have to prove you had the income to pay a loan. And they're also saying if you're 90 days late on a loan, we're not going to let you refinance there. About 16 to 20% of lenders have already said they're increasing or tightening their lending standards as a result, making it harder. Remember here, the exit strategy, these were temporary loans for people. The exit strategy was in a year when their home value really jumped up, they were going to refinance or if their income improved. Now that if their home doesn't jump up in value, they don't have an exit strategy and they're not able to refinance. It's a problem.
You got a lot of people in trouble right now. A lot of people are struggling. And then we're going into the spring buying season. You know, someone's out there saying, wow, I really want to buy my first home. What do I do? So what's your advice for them?
For first-time home buyers, I think there's opportunity and challenge. The opportunity is you're going to find home prices are going to be lower. There's going to be the only exit strategy for some people in subprime loans that they can't refinance and can't afford, maybe to sell their home or to walk away from it, the worst, and give it over to the bank in foreclosure. And you're going to see foreclosures rising, which you've already seen.
So you say you've got to review your credit history and you've got to get pre-qualified.
Review your credit history. Make sure, because these lenders are cutting out easy lending capabilities. So you may not be able to borrow. Fix up your credit history first and then get pre-qualified because the lending standards for loans are changing rapidly. You don't even know what loan you'll apply for. So make sure you get pre-qualified before you shop.
All right, let's say you're a homeowner, you're in trouble, you're missing payments. What do you do?
Yeah, I think this is the heart of the matter here. If you're one of these exploding arms and you know the payment now just rose and you can't afford it, get on the phone and call your lender and say, I'm not going to be able to afford this and I can't refinance right now. Let's work something out. They may be able to work out your loan for you, give you a grace period, or even restructure your loan into terms you can afford. Also, try to refinance to a fixed rate mortgage. Fixed rates right now are about 6.25% if you can do that, but you'll have fees and charges. Another alternative is a streamlined or loan consolidation where your lender can even consolidate your loan or take your loan, put it into a fixed rate at low fees to do that.
Well, it's good to know that there are also some alternatives out there. Ray Martin, thank you so much. We appreciate it.
You're welcome.